Welcome back, guys, to the second half of the semester. We're going to be talking about valuation, GST, and excise tax. So, valuation is referred to how the value of the shipment is being impacted by additions or deductions of that price that the seller has given the vendor. Um, like how do you arrive to that value? Yeah, remember that upon that value is that we calculate duties and taxes, and we need to have an accurate value of the goods. We just cannot just simply um, provide a value because it's the most suitable value that we believe it would be, So for that, there are several um, methods to arrive to the value for duty of my goods. And CBSA is very strict on this particular aspect of customs because depending, like I said, of that value for duty, it will be less or it would be more duty than an importer will be paying. So imagine that it would be left to the importer to decide how much duty they have to pay, right? It wouldn't be correct. So there are several methods. The first one is the transaction value, and that's where we're going to start. And then to apply this method, you have to go by sequential order. It means that you cannot just assign one method or use one method. You have to try to see if you can apply a method by method until you're left with your last resource, right? That is the residual method. The transaction value is the most common method that we use to arrive to the value of duty. And this is the value of duty based upon the price paid or payable for the goods being appraised. So mainly is how much you pay to your vendor. It's what your vendor wants to sell the good to you. There are certain adjustments, both additions and deductions that actually can be made to this price to arrive to a more accurate transaction value of the goods. There's certain things that will impact that value. The conditions to apply this method is that the goods were sold for export to Canada, so they're going to be exported to Canada. The purchaser in the sale for export is the purchaser in Canada, and the price paid or payable for the goods can be actually determined. We're not guessing that price. It's something that can actually be calculated on general accounting terms. So those transactions and additions are quite simple. They are basically certain elements that you should be adding to the value of your goods. And those additions will be certain commissions and brokerage, all packing costs and charges, except the export packing that will not be. You can just omit that item. The value of certain goods and services provided free or at a reduced charge by the purchaser for use in the production of the imported goods. That's what we call assist. Certain royalties and license fees. The value of any proceeds from the subsequent resale, disposal, or use of the goods which occur to the vendor, and the associated costs relating to the movement of the goods to and at the place from which the goods were shipped directly to Canada. So this will be the transportation cost, the the exporter had to pay to move the goods. Let's say this is the manufacturing side, and had to move it to the port, right? So that will be this. This is actually a port, and this is a vessel. So let's say this is the container, yeah, and he had to use a truck to move those goods. That transportation cost should be added to the value of the goods, and I'm just making this very clear because there's other transportation costs that is actually deducted. Yeah, so this one will be added to the goods because it's adding value to that good. Yeah, here. From here to, let's say, to the port will be added. The deductions will be transportation, the cost of transportation, and associated costs related to the movement of the goods from the place from which the goods were shipped directly to Canada. So once they're at the port, like here, you can now, you also have a cost of freight, let's say a marine freight that you have to pay. So this one, this cost will be actually deducted from the price of the goods. I don't want you to get confused because since it says transportation, one is deducted and the other one is added. So um, it's mainly because of at what point of the movement of the goods you're going to be adding that transportation or deducting that freight cost. So other deductions that you can do to your good could be certain costs, changes, or expenses incurred or arising after importation in respect of the goods being appraised. Yeah, something that happened after importation. And then Canadian duties and taxes. You can deduct that from the value of the goods if there was any Canadian duties and taxes paid. This could happen, I don't know, the goods went out to Canada for repair, and then when they came back, they paid duties and taxes. You can deduct those duties and taxes from your good.
Where can I see those deductions and adjustments to a CCI? Well, I will see them at the lower part of my CCI form. Remember that, before on week 2, I believe that we only work up on the upper side, upper part of my form. Now I'm going to be using the lower part of my form to indicate to CBSA that there's some deductions and additions that I need to do to my value for currency conversion. That is, if the invoice is in a different currency like this one, that it's in USD. So this is the part, fields 2023 to 25, that I will actually mark if there's any deductions or additions that I need to do to arrive to a new value of currency conversion. Let's use this example. So let's say that on field 23, I have noted that there is $200 that the vendor has incurred from the place of direct shipment. So from the date of direct shipment, the place of direct shipment, sorry, any kind of cost that I had, I can deduct it from the value of my invoice. And then I will arrive to a new value of currency conversions, just like I did here. And because I have a new value of currency conversion, I will be paying less duties. Yeah, less duties to be imposed to my value of currency conversion. Let's say that now my vendor has told me that instead of incurring in the cost of freight um, from the place of direct shipment, now this cost is to the place of direct shipment. Yeah, and because it's to the place of direct shipment, I need to add it to the total value of my invoice so I can arrive to a new value of currency conversion. And in this case, I can see there's been an increment on that value. Thereby, if the good will pay duties, it will pay more duties because the value of currency conversion has been adjusted to make it a little bit higher. I have posted on Blackboard a video on valuation by a very good friend of mine that that works at GHY International. This person is actually somebody that is, has a long story trajectory in customs and gives you some examples of how to apply additions and exclusions when you're using the transaction value. So I'm not posting it here, but it will not run on this video. You will need to open it directly on Blackboard to see it. If for any cost you cannot arrive to the transaction value using the price paid or payable, you can use the method called identical goods. Identical goods is a consideration that you can give to identical goods being appraised. So the transaction value method for identical goods can be adjusted if there's any kind of differences in the trade level, if there's any differences in towards quantities or transportation costs between identical goods and the goods actually being appraised. So this will have to be like if I'm comparing a bag, yeah. So the bag that but it has to be the same bag produced on this by the same manufacturer on the same location, and that identical bag, the price is $10, then I can use those $10 for a shipment that I have 4 bags. If I don't happen to have the price paid or payable on that good. The following method that you can use to arrive to a value for duty is using the method of similar goods. Similar goods is essentially the same as the one contained in identical goods, except that the basis of value for duty is of values that are similar to the ones that are being appraised. The next method is called deductive method of valuation. So remember, this has to be used in sequence. You start with your price paid payable, you follow by identical goods, then you move to similar goods, and then if none of that has worked, you cannot arrive to a value for duty, you can use the deductive method of valuation. Under deductive value of deductive method of valuation is you need to look into sales of goods um, of similar goods, and then a price per unit is established, and that price per unit you will actually adjust it on on deductions or account of either profit earned or expenses incurred on sales in Canada. You go like deducting things that you believe that should be deducted from that price that has been obtained on either identical or similar imported good. So once you have that price per unit adjusted, you can use it in calculating the value for duty of the goods being appraised. The following method is called the computed method evaluation. Under the computed method evaluation, and the determination of value for duties will start with the cost of production of the goods being appraised. To this cost of production, you will add the account for profit, general expenses, incurred on sales to export to Canada, and then the total amount will be the basis for calculating the value for duty of the goods being appraised. So you're actually calculating or computing the cost first, and then you will add profits, and you will add any general expenses, and then that's how you arrive to this cost, this computer method evaluation. If all the previous method evaluation have been tried and have been found to be inapplicable to the circumstances surrounding the transaction of the goods being appraised, then you can use the residual method evaluation. And this is applied under Section 53 of the Customs Act. A value for duty is derived from a flexible application of one of the previous methods set out before. Yeah, so it's like a flexible application of any other method that was applied before. Yeah, because none of them fitted 100% to the right valuation. Let's talk now about GST. GST is either 5% on imported goods, or it could be what they call zero rated. There's certain goods that do not pay GST. So GST doesn't have to be paid on basic groceries such as milk, bread, and vegetables when you are importing this type of goods, on agricultural products such as grain, raw wool, and dried tobacco leaves, um, most farm livestock, and most fishery products such as fish for human consumption, prescription drugs and drug dispensing services, certain medical devices such as hearing aids and artificial teeth, feminine hygiene products, exports, most goods and services for which you charge and collect the GST in Canada are zero rated when you export them, and many transportation services where the origin or destination is outside Canada. Those are the only time that you can actually um, will be taxing at 0%. Other than that, that will be 5% on each single item. If you want to have more information, you can actually click here on type of supply, and it will take you to the CRA, the Canada Revenue Service Agency, that is the Canadian government department that sets up the rules and the collection of GST on imported goods. Now let's talk about excise duties and taxes. So as per excise tax 2001, you can find the taxes imposed to spirits,
wine, tobacco products, cannabis products, and vaping products. And then under the excise tax, you will find the duties imposed to beer. So when these goods are manufactured in Canada, the buyer is the one who's been paying these duties, right? But when they are imported, they must be paid by the importer of record. Examples of excise duties will be spirits. So this will be applied. The rates are per liter of the spirits, and the rates are per liter of absolute ethyl alcohol, depending on the composition of the spirit. So you see here that the amount is applied by liter of spirit, so it's 0.33. That it's a little bit high if you apply by liter. Imagine if you're going to import alcohol, for sure you're not going to bring like a low amount of liters. You're going to bring a high capacity of liters, so you will have to pay duties, excise tax, and then GST on that item. So it increases the cost of your item. And a special note for cannabis. So in Canada, cannabis can only be imported or exported for medicinal purpose, and not for recreational or any other purpose. Is actually prohibited for import or export. Only for to be used like a drug that will help you sleep or get you through migraine or something like that. And that's when they have like no restrictions to import or export this good. Of course, you will need a license to be able to do this, but it's every day gets like a little bit more simple on how to do this type of importation and exportation of this item. The one that we saw before was excise duties. There's something additional, and that is called excise tax. Excise tax are charged on fuel inefficient vehicles, automobile air conditioners, and certain petroleum gas, like certain gasolines or naphtha, that needs to be paying this tax. All the information on excise tax, you can find it under CRA, and then they actually have a special section for questions and answers, and also they have a special person that you can call them, and that person will explain when somebody could be exempted from GST, or if they actually have to um, be paying these additional taxes.